Picture this. A client calls in a panic, their claim got complicated, and they need someone who actually knows what to do next, not someone flipping through a manual. That's the broker this course builds. The Advanced Skills for the Insurance Broker and Agent course, part of the Chartered Insurance Professional program, takes you past the basics into the judgment calls that define a trusted advisor. Let's walk through some real practice scenarios together and get you ready for that final exam. Question no. 1. What is the primary responsibility of an insurance broker when advising a client? A. Selling the most expensive insurance policy available. B. Representing the interests of the client and providing suitable insurance advice. C. Avoiding communication with insurance companies. D. Guaranteeing that all claims will be approved. Correct answer. B. Representing the interests of the client and providing suitable insurance advice. Explanation. An insurance broker's main responsibility is to act in the best interest of the client. Unlike an insurance agent, who may represent a specific insurance company, a broker typically works with multiple insurers and helps clients find coverage that matches their individual needs, risks, and financial situation. A professional broker must understand the client's requirements, evaluate potential risks, explain policy terms, and recommend appropriate insurance solutions. The broker should not focus only on selling policies, but should provide ethical and transparent advice. A broker cannot guarantee claim approval, because claim decisions depend on policy conditions, coverage limits, exclusions, and the circumstances of the loss. The broker's role is to help clients obtain suitable coverage and understand their responsibilities under the insurance contract. The question, No. 2. Which of the following best describes the principle of utmost good faith in insurance? A. The insurer must always pay every claim submitted. B. Both parties must provide accurate and complete information relevant to the insurance contract. C. The client can hide information to get lower premiums. D. Only the insurance company has legal responsibilities. Correct answer. B. Both parties must provide accurate and complete information relevant to the insurance contract. Explanation. The principle of utmost good faith is one of the fundamental concepts in insurance. It requires both the insurer and the insured to act honestly and disclose all important information that could affect the insurance agreement. For example, when applying for insurance, a client must provide accurate details about their property, business operations, health condition, or previous claims history, depending on the type of insurance. If important information is intentionally hidden or misrepresented, the insurer may have the right to cancel the policy or deny a claim. Insurance contracts depend heavily on trust because insurers calculate risk based on the information provided by clients. Brokers play an important role by helping clients understand what information must be disclosed and ensuring applications are completed accurately. Question No. 3. What is the purpose of a client needs analysis in insurance brokerage? A. To determine how many policies the broker can sell. B. To identify the client's risks, objectives, and appropriate insurance requirements. C. To reduce communication between broker and client. D. To avoid collecting client information. Correct. Answer. B. To identify the client's risks, objectives, and appropriate insurance requirements. Explanation. A client needs analysis is a critical step in the insurance advisory process. It helps brokers understand the client's current situation, potential risks, financial goals, and insurance expectations. During a needs analysis, the broker may review information such as personal circumstances, business activities, assets, liabilities, existing coverage, and future requirements. This allows the broker to recommend policies that provide appropriate protection. Without a proper needs analysis, a client may purchase insufficient coverage, pay for unnecessary protection, or fail to address important risks. A skilled insurance broker uses this process to provide professional advice, rather than simply selling products. Question No. 4. Which factor is most important when determining an appropriate insurance recommendation for a client? A. The broker's personal preference. B. The highest commission offered by an insurer. C. The client's risk exposure, needs, and financial circumstances. D. The popularity of an insurance company. Correct answer. C. The client's risk exposure, needs, and financial circumstances. Explanation: insurance recommendations should always be based on the client's individual situation. Every client has different risks, financial responsibilities, and protection requirements. A professional broker evaluates factors such as the type of risk, possible financial losses, existing insurance coverage, budget, and long-term objectives before recommending a solution. Choosing a policy only because it provides higher commission or because an insurer is popular would not meet professional standards. Insurance professionals are expected to provide objective advice and ensure that the recommended coverage is appropriate for the client. A suitable recommendation balances protection, affordability, and the client's specific circumstances. Question No. 5. What is the main purpose of explaining policy exclusions to an insurance client? A. To make the policy appear more attractive. B. To help the client understand situations where coverage may not apply. C. To prevent clients from purchasing insurance. D. To increase the insurer's profits. Correct answer: B. To help the client understand situations where coverage may not apply. Explanation: policy exclusions are conditions, situations, or risks that are not covered under an insurance contract. Explaining exclusions is an important responsibility of insurance brokers and agents because clients need to clearly understand the limitations of their coverage. For example, a property insurance policy may exclude certain types of damage, or a liability policy may have specific limitations. If clients are unaware of exclusions, they may expect coverage that the policy does not provide, leading to dissatisfaction during the claims process. A professional insurance advisor explains both the benefits and limitations of a policy. This creates transparency, helps clients make informed decisions, and improves trust between the client and the insurance professional. Clients don't remember the broker who sold them a policy. They remember the one who showed up when things got hard. Finishing this course and passing your exam shows you can. Read complex client situations and respond with confidence. Apply real broker-level judgment, not just textbook rules. Build the kind of trust that turns clients into lifelong relationships. Move closer to your full CIP designation. Textbooks only get you so far. The exam rewards applied thinking. Head over to CertBoosters and run through practice questions built the way the real exam thinks. Links below. Go become the broker people actually trust.